G'day everyone, welcome to this rundown of global stocks, Australian and American in particularly. And I think the last week in Australia has really been a defining moment in what happens in this market. And as I'll explain a little bit later, there's been a significant sea change. I don't think it's temporary. I think it's going to be here with us for quite some time. And I really want both members and non-members to understand that the game has now changed quite considerably in Australia. And unless you recognise that, then you're going to be beating into a very stiff breeze, possibly for quite some time. So let's have a look at what the action was last night or last week. The American index, the S&P 500 index, advanced by 25 points on the week. So it was a strong week, and that was in the face of everything that was going on in the Middle East and with Russia and with the Scottish vote. The American market still managed to power ahead. Now, there was some profit taking on Friday night once the outcome of the Scottish vote was known, but that's normal, bit of a buy the rumour, sell the fact kind of effect. But otherwise, it was an extremely positive week in America for the S&P. Certainly certain sectors did better than others. Energy sectors still remain under pressure, mining sectors remain under pressure, but pharmaceuticals, digital technology, and a few other selected sectors did pretty well. But America is where the money is. If you want to trade where the momentum is and where the positive outcomes are occurring, then America is where it's at. We'll come back and look at the S&P chart in just a minute, but the ASX 200 index ended up down 100 points for the week, and that was after a rebound on both Thursday and Friday. So it was a pretty sad week in Australia. And the major influence now is the fact that our dollar has now broken support and is clearly in downtrend. Now, the reality is that 40% of our market is basically overseas fund managers and hedge fund managers, and they have a massive impact on what happens to the value of our index. Now, you might have noticed that banks, telecommunications companies like Telstra, a lot of the high dividend yielding stocks like Wesfarmers, they are all heavily sold down during the week. And I think this is just the start of what's going to continue for quite some time. Stock prices are not going to be trading on fundamentals and valuations. If you're an overseas fund manager and you are making an asset allocation decision, it's not about whether the banks are paying 5% or 6% dividend yield. It's about where you're thinking the Australian dollar could go, because if the Australian dollar falls, then you're losing money, irrespective of what else happens to the stocks. And the amount of money that these overseas fund managers are controlling can't be turned around in just a matter of a few days or even a few weeks. This will take quite some time to unwind. I think there's going to be a significant amount of pressure on the Australian top 50 stocks for quite a period of time. And that's going to set a fairly negative sentiment for the whole Australian market. It's going to make it very difficult for good stocks, ones that aren't necessarily held by overseas fund managers, to make headway, because the sentiment is just going to be negative. People are going to be a bit worried about where the Australian market is going. So I really think this week has really underlined a very, very significant change in our market. Let's have a look at a few charts. We'll start with the S&P 500. You can see if we pan back the red 150-day moving average line, no break to that at all. It's still heading up powerfully. The index itself is well above that moving average, indicating enormous strength. You'll notice I've got a little Fibonacci scale on here, which is the last run from the 7th of August up until a peak on the 4th of September. You would normally expect the index to pull back to at least the 38.2% level, which was at 1971, and that was what I've been talking about over the last couple of weeks. It didn't even make that level before it took off again. So just an amazing show of strength in the American market. And you can see it moved to a new high, got up to 2019 on Friday night before easing back a little bit with a little bit of profit taking. So still enormous strength in the American market. Now that's at the S&P level. If we just have a look at the Russell 2000, nowhere near as buoyant. You could see it's really got into a bit of a sideways pattern. So there's still a lot of influence in the American market by some of the bigger stocks, granted, but it's still a pretty positive environment over in America. Now let's look at the Australian index. We've now formed a new or a lower low. So we've just managed to scrape out a slightly higher high, but we've now come down to lower lows. And I think we might, even if we get a little bit of a bounce in the near term, I think we're heading down further. And I wouldn't be surprised to see our market back down testing below 5,300 and possibly even down to the 5,000 level. Now, I know that flies in the face of what most commentators are saying, but go back to the start of my argument, and that is that the Australian dollar breaking below the support level at around 91 cents is a very, very significant thing. And I think we're going to see significant selling in the Australian market for some time to come. So for me, it's a whole new ball game in Australia. I've been talking all year about diversifying your holdings into America. Those members and other people that have followed me there have done extremely well out of their American stocks. They've also had a huge bonus from the fact that the Australian dollar has now fallen by about 5 or 6 cents. So the gains have been extremely attractive. So new ball game as far as the Australian market goes. Now turning to commodities, gold was down $12 on the week, which was a little bit less than the week before, but gold still really heading down. Partly US dollar index strength related. So I think a fair bit of that is currency effect, but there's a little bit of additional selling of gold as well. But look, gold stocks have broken to the downside. The last couple of days have been a bit nasty in gold stocks internationally. Absolutely do not try and pick the bottom in gold stocks at the moment. It's just an absolute fool's game trying to do that. Wait until we get some stability in currencies and some stability in the gold market before you try and do that. Now silver also, as you'll see from the chart, has absolutely comprehensively broken support. This was a very significant move, and silver can tend to be quite volatile. Wouldn't be surprised to see silver break down to a very significant degree. But interestingly, against that backdrop, we had copper slightly higher to $3.13. It was $3.11 a week ago. So despite the fact that the American dollar went up, copper actually managed to edge ahead a little bit. So that's quite encouraging because copper is a good barometer of what happens economically around the world. Crude oil was also steady at 92 compared to a week ago. So there's the spot copper chart. You can see right over in the right-hand side there, just a little bit of a blip upwards, in fact, in the copper chart. But looking at nickel, you can see nickel continues to decline in the short term, and nickel certainly down on the week. So let's have a look at those few charts. This is the US dollar. This is the gold price for a weekly chart in US dollars. Now you'll notice that it broke a week ago. It broke this uptrend, short-term uptrend. So overall, we're still in a phase one base, and we would need to decline below 1200 or 1190 to break that scenario. So that's critical, and we're getting close to it. But gold had traded in a bit of an uptrend. Now that broke 2 weeks ago and was confirmed in the last week. So not a great trend for gold. Just looking at it on a daily, you can see 3 of the 5 days last week were in fact slight gains, but the down days were quite large. But it's really the silver chart. This is the one that where there's really been a very, very significant breakdown in silver. You can see we had a clear support level through here, and silver's broken that quite decisively. So if we pan back and take a big picture look, the bottom in silver is around about $9. I'm not saying we'll necessarily get to there, but this is a very definitive break in silver. Do not try buying silver at the moment. I know there are certainly some commentators that are calling for a new bull market in silver, but that was an ugly night on Friday. You do not want to try and buy into that. Now just turning to the gold stock indices, this is the GDX. So again, we're still in a phase one base, but we have broken down, and that's disappointing and surprising. And this is the GDXJ, also broke down on Friday night. So the whole precious metal sector, just leave it alone for the time being. So moving on to the overall strategic approach, selected sectors in the US, and I've been talking about them all year, so I won't repeat them again. That's where the money is. And if you're still in denial about where at least some of your capital will be, then I hope this video really serves as a wake-up call. I know that there is a natural tendency to want to stay in the Australian market. It's what you know, you're comfortable with the brokers, you're comfortable with the currency situation, all those things. But I've got to tell you that it's going to be very hard work in Australia for quite some time, for the reasons that I outlined at the start of this video. And the real money is being made in America. And I hope I can't state that message strongly enough. The profit opportunities in Australia are going to be limited until the dollar stabilises. There are some great companies. We've got some terrific companies in Australia. So don't get me wrong. I'm not saying we don't have terrific companies with great fundamentals that are undervalued in Australia, because we do. But when you've got 40% of the market controlled by overseas interests, and they are now fleeing the country because the dollar's broken down, then fundamentals matter nothing, valuations matter little, and it really needs for stocks to find a new support level. So the profit opportunities in Australia are going to be very limited until we see some stability in the dollar. So to my thinking, in Australia, stock prices are going to defy good fundamentals for some time to come. So for anyone who's not a member of Specialist Share Education, you'll find more information on our website, and there's my email address if anyone wants to contact me. The title of this video was a sea change for the Australian stock market in the last week. I really think you need to take notice of that. I think you need to start doing some things differently. And if you would like to communicate with me on that score, then please, by all means. That's it for this week. Cheers.